Welcome back. Thank you very much for joining us again. I'm now very pleased we're going to move into the FinTech section. How to kick off? There's so much going on in this space. There are a number of major centers are trying to position themselves as global FinTech hubs. Hong Kong, of course, is one of them, but there's a lot of competition out there. As you heard Ambassador Holliman say a bit earlier, one of the key assets Hong Kong may have in this space is its approach to data. It certainly also has deep capital markets and a good recent history of innovation. The pace of change in FinTech is phenomenal. You have the new players, you have the incumbents trying to embrace it, and also, I guess, companies trying to plan strategies for how do you change in a world where technology is changing so very rapidly. So lots of stuff to consider in this panel. Very pleased to welcome my speakers, Jessica Lam, who's Group Head of Strategy at WeLab, Charles Dohorsey, who's Director of Consensys, Lukas Petrikas, who's Managing Director and Head of Innovation Lab at HKEX, and James Kynge, Global China Editor and Editor of TechScroll Asia for the FT. Please join me in welcoming my guests. Let's start, I guess, with the geography, and we're in Hong Kong now, and how it positions itself and how successful it can be as a FinTech hub. Jessica, I want to start with you. You're a product of Hong Kong as a FinTech hub. Mm-hmm. How do you get there, and what's the advantages of Hong Kong, or disadvantages, compared with other centers?
Well, for us, we started off in Hong Kong about 6.5, 7 years ago. I think back in 2013, there wasn't much known about FinTech and startups in itself, right? So we had the foresight of being one of the early movers to really have that innovative edge and sort of think outside the box. Why we started in Hong Kong is because the team of founders are Hong Kong people. You know, this is home for us, so it's the most natural market where we knew the most about it. But actually, all the things that people think about in terms of, you know, we are finance professionals, you know, who have the courage to try something new and blend in technology and innovation into what we do. So what's better than to marry the best of both worlds in Hong Kong, where you've got well-developed infrastructure, you know, laws and rules and regulations, but you can couple that with the expertise and the knowledge that we have in the financial sector. So everything just made sense, which is what we did when we started in 2013. But that's not where it ends, right? Because as time goes on, you kind of take that know-how, that knowledge and experience, and then learn how to transport that, you know, into another market in a way that works. And so therefore the journey for WeLab has been Hong Kong, you know, learning from that, building onto that, continuing to work in Hong Kong, and then in mainland China, as well as in Indonesia, which is where we are right now.
So a launch pad apart from anything else. It's the base, but it's also where you can launch internationally.
That could be one way of doing it, but having said that, we're doubling down or tripling down in Hong Kong because we're actually building a virtual bank right now, which may actually eclipse all our other businesses internationally. Yeah. So you could see it as a launch pad, but you can also see it as being the most solid foundation and actually being, on a standalone basis, an extremely ripe and lucrative market to start a business.
Okay. Very keen to talk about the virtual bank in just a moment. Lukas, again, Hong Kong, you're at the center of it in HKEX. Is it the capital markets? Is that the main edge?
Yeah, I believe so. I think for all the narrative that you see these days about the trade war affecting the current account, there are many things that are happening perhaps in the capital account which are less immediately visible or less focused on by the media, which are actually quite interesting and encouraging. So for example, the level of foreign investment into China in terms of the investment that happens at the portfolio level, equities and listed bonds, is now probably about half of the direct investment, the sort of asset acquisition M&A that's been going on for decades. And foreign investors are adding 40 billion US dollars a quarter to that portfolio. So if anything, that inflow is accelerating, not just because of things like, you know, China's weight in international indices is going up, but also I think it's testament to Hong Kong because probably over half of those flows come through Hong Kong infrastructure today. It's testament to the fact that it's built connectivity schemes with mainland China, such as Stock Connect, Bond Connect, and so forth, that have gained maturity, gained international acceptance. And what we're seeing now, specifically in the exchange, is that a lot of new investors are coming in this year for the first time into China. So for example, pension funds from Ireland and Luxembourg that had to pass very high regulatory barriers to allow for the regulators to allow them to even put money into mainland China that is custodied in Hong Kong. That process took 3 or 4 years. It's now complete. They're starting to put in money for the first time. So if anything, we're seeing a sort of good narrative, breaking some records on those schemes. What's interesting for Hong Kong is the money that's going the other way, right? So from China into the rest of the world. The size of that portfolio today officially is about $500 billion US dollars, so it's barely scratching the surface. I mean, if you look at the shareholder register of any large blue chip company globally today, you're going to see sort of Norwegian, Singaporean, Abu Dhabi sovereign wealth funds having like 1 or 2%. I think fast forward 5-10 years, you're going to see some kind of Chinese institutional / retail presence having a similar level of influence in global markets. We've barely started to scratch the surface. And I think as that money comes out, Hong Kong is the natural place for it to go, because it's the only city that can provide that sort of, I guess, combination of international certainty and centralized comfort in the way that the money is held and goes in and out.
Okay. Charles, is it the ecosystem here, and will that long-term underpin Hong Kong as a major fintech hub?
I think one of the key advantages of Hong Kong fintech ecosystem it's that it has been growing organically. So the government, regulators, and key major stakeholders here are supporting the ecosystem, but it's not kind of showered with subsidies or anything like this. There is subsidies available, there is support available, but entrepreneurs coming in Hong Kong and growing their business, their fintech businesses here in Hong Kong, are very pragmatic. They've got like good fundamentals, and they come and grow the ecosystem the same way the London ecosystem is very strong and very well recognized globally, the same way for the US ecosystem. Government support, but do not get too much involved. So you've got a very healthy growth of fintech here. And when you look at fintech, there is always very emotional conversations, I think, thinking there is a new bank, there is something new which will disrupt everything. And when you look at Hong Kong, you've got a very strong B2B financial services kind of playground for technologists and for fintech entrepreneurs. So payments comes first, banks come second, but then if you look at all the technologies for capital market, how you can assist hedge funds or any other players here in the industry, it's really promises a very strong growth long term. And it's not going to be kind of a short fire because there is subsidies or a special scheme. It's really coming here because there is business here. And at the end of the day, I think a lot of the assets, if you look at the Hong Kong Stock Exchange or some other big numbers about the Hong Kong ecosystem, the assets are here in Hong Kong. So even though there is some challengers, the assets are here. The technology will enable this asset to be more liquid, to be more moving between hands to hands, and it makes me very bullish for Hong Kong, medium to long term.
Okay. James, the competition, and it's pretty intense in the tech space generally, but in the fintech, marginally. You take a global view as head of TechScroll. Where does Hong Kong fit, and what's and the outlook in terms of it remaining a key center for fintech?
Yeah, well, I'm glad you held a panel on fintech in this region, because I really do think it's the hot issue right now. To borrow a phrase from the Chinese Communist Party, what we're seeing now are changes unseen in 100 years. This really is revolutionary, what's happening. And the way that it will revolutionize not just Hong Kong, but the rest of the region has just started, but will be, I think, very dramatic. Just to give you another quote, and this one's a bit more scary, this is from a McKinsey report just the other day, says that banks will become footnotes in history. That's a pretty amazing thing for a well-known consultancy company like McKinsey to say. But if you look at the way the trends are unfolding, I'm not going to say that myself, but you can see that banks are really up against it. Just a couple of statistics. Hong Kong as a center of fintech, I would say, as a member of the last panel said, is a question of lagging behind. The mainland has been far and away the world leader in aspects of fintech until now. You will see, for instance, in terms of digital payments, China is far and away ahead. It dwarfs what's happening in the US. Also, we heard in the last panel, but I think this is a key point, the PBOC, the People's Bank of China, is about to launch their digital currency. This is a very key move. Obviously, it has been accelerated by the competition through Facebook, talking about Libra. The whole world is now going to grab onto this idea of digital currencies. Once China begins to do this, nobody can delay in following. The last thing I want to just say is look at Singapore and look at India. India is the hottest tech story in this region at the moment. It isn't the biggest tech story, but it is the hottest. I say that because the number of tech unicorns in the world now, China's number 1 with about 200, America's number 2, and India is number 3. But India's increase in terms of creation of unicorns is faster by far than all of them. India's unicorns now number 34, and they have doubled in 1 year. This is absolutely key, and FinTech is at the center of India's emergence. If you want to look at a really interesting company, maybe I can have a chance to talk about this a little bit more a bit later, look at PayTM. But India at the moment is a feeding frenzy for FinTech companies, not just the local PayTM, which is backed by a whole lot of big investors, but several other international names as well. Singapore's also interesting. The battle for the super app in Indonesia, maybe I can come back to that.
Come on to that too, yeah.
But basically, FinTech is where it's at the moment. There is no greater disruptive force in Asian business right now than FinTech.
That sets us up. Jessica, virtual bank. Bank's a footnote in history, according to McKinsey. So you're going to push those banks to that footnote.
Well, a couple of things, right? First of all, actually, to James's point about Hong Kong lagging behind, I actually want to have a little bit of counter to that. Because I think when we think about FinTech, FinTech's actually really, really broad, right? You know, I think everyone from the consumer-facing side sees payments as being FinTech. But FinTech is crypto, right?
Yes.
It's virtual banks. It's a lot of the technology. A lot of things are actually middle office or back office that we don't see. As Charles said, a lot of it are actually B2B solutions, right? Mm-hmm. The problem is, or not the problem, I think the most visible thing when we think about FinTech is just payments and e-wallets and payment methodologies. So I want to cut Hong Kong a little bit of slack in saying it's actually a little bit unfair to characterize and say that we're lagging. Because if you look at the virtual bank framework and the regime, Hong Kong is actually pretty much on the forefront of that. You know, you can argue that other markets started this regime in Asia much earlier, but they didn't go all the way. You know, they kind of took a safe approach where you have a account where you can partially do things online, but not fully. The Hong Kong regime right now for the virtual bank has gone completely to say that, look, you can function with a banking license and you can do absolutely everything from bank account opening to do full transfers and every single transaction going forward fully online without ever seeing your customers. So actually, you can argue that Hong Kong's taken even more of a forward approach compared to other jurisdictions on this front there. So that's my segue into virtual bank, but yet in a little bit just providing a different perspective on what James mentioned just there. I don't disagree, it's just different sides to it. So what virtual banks are actually, by regulation, it's exactly the same as what a traditional bank has to deal with. As you think about capital requirements, as you think about the rules and regulations, the banking ordinance, all that good stuff, exactly the same. I think the key thing behind it, other than the fact that we don't have branches, is really how do you use a lot of technology to quote unquote modernize the entire system. I don't think the products itself will change all that much, right? Ultimately, I need to transfer money to Charles. It's a payment, right? It's a transfer. That won't change, right? Ultimately, the actual product code itself in terms of payments and transfer won't change. But how do we do the plumbing behind the scenes so it's more efficient? Maybe it's the government's FPS or the transfer methodologies, but also it could be how does the customer find it? Is it more user-friendly? Is it something that's more intuitive and less clunky to get there? So part of it is the technology, but more importantly is the mindset. How does a virtual bank step into a customer's shoes and see it from their perspective, rather than just providing the mechanics to get things done? So I think when you piece all of these different products together and working with different ecosystems, you know, maybe it's a super app, maybe it's not a super app, then what the virtual banks or what these digital financial institutions or digital fintechs or whatever you want to call it wants to do is ultimately provide the same level of safety, security, and confidence from a security perspective that you get from a regulated entity, from a bank, but bring the joys, the comfort, the flexibility, the convenience, hopefully the reduced costs, less friction that a digital fintech player brings. So ultimately, it's marrying the best of both worlds.
And there's a generational thing here too, I assume, isn't there?
Yes and no. Yes and no. I think everyone thinks like, oh, all these digital things, it's only for the young people. A colleague told me the other day that she was inspired to join us a year ago because when she was in China on a business trip, she saw a 70-something-year-old lady using Alipay for payments when she tried to pay for cash, and basically was, she got the dirty eye from the lady to say, who are you? Like, who uses cash, young lady, basically. So she's like, if this old lady in her 70s somewhere in China is able to learn how to use e-wallets for payment, why can't I do that, right? So it's not really an age thing, it's a mindset and the willingness to do so.
Okay.
But I agree, it won't be a one-size-fits-all.
Yeah.
There will be some people who will take a little bit longer to get comfortable with the idea, but everything takes time.
Yeah.
It's just a matter of how long that time is, and I hope the key thing is everyone is open-minded and won't resist change, because that is where things go wrong, when you are resistant to change or learning new things.
Lukas, James says FinTech is where it's at. Unprecedented change. You run a FinTech lab. Is that what you see?
Yeah, absolutely. I think to add to that, the intergenerational aspect of FinTech in particular, I think is massively important. When you read sort of research about China's closer integration with the rest of the world, at least on the financial markets front, there's often a narrative that says there's a lot of money locked up in the banks and deposits, not enough of that has gone to capital markets yet, and so forth. And when that reaches a sort of more Western-like balance, perhaps we will see different behaviors. But I think the transfer of wealth that people are missing is the intergenerational one, which is going to be probably even larger than the one from sort of banking into capital markets. And I sit in a lot of meetings where people older than myself kind of say, oh, millennials, the next generation. I said, oh, please, it's the current generation. People born after 1980 are 63% of the world's population, and 2/3 of those people live in Asia, right? And according to a recent survey we did, 2/3 of those people don't trust traditional capital markets. They'd rather go to a crypto exchange, right? Yeah. They come to Charles, they don't come to me. Yeah. So with that, is FinTech important? I think it has a huge, huge role to play in getting this current generation more excited about being proactive about how they manage their wealth and their assets. And we're living in a time, as you rightly said, where traditional banking perhaps is becoming more of a footnote because the experience of it isn't so cool anymore. Nobody really wants to read 30 pages of insurance policies either, right? But I think capital markets, if managed the right way, can provide a very interesting counter-narrative to that. Because capital markets, when you think about it, is just a collection of listed companies, effectively. And all of these companies in their own right are entrepreneurial success stories whose path included or sometimes culminated in becoming a listed company. The stage that we're sitting on right now, through various iterations of carpet colors over 32 years that it's been in this building, has hosted every single success story, private company, public company, to come out of China that has come and listed its shares. Everything from the clothes people are wearing to what you're drinking to the coffee you're having outside, the building that we're renting, everything is owned or managed by a Hong Kong listed company. And I think that connection between the physical world and what we perceive as being the sort of nebulous virtuality of finance capital markets, that connection has not yet been made as strongly as it should be. And for the next generation, that connection is going to be critical. So when we set up an innovation lab here, one of the things we have in mind is not just to sort of automate the pipes. It's really to ask ourselves challenging questions. How can we make capital markets, how can we make financial instruments relevant to people by associating them with the physical world around them, by associating them more with the sort of what we perceive to be trade, right, as opposed to trading.
Yeah.
Yeah.
Okay. I do want to turn though to digital currencies, and James, I'll start with you on the China passing of legislation on cryptography, moving towards a digital currency. That will be a dramatic shift, possibly driven by Libra and all that's happening in the US. But your take on the significance of that?
Yes, I mean, the People's Bank of China has been planning this for many years. I remember having meetings with members of the research department at least 5 years ago. So obviously this is very well planned. I think it's quite interesting to think about motivations. Perhaps it's been accelerated by Libra, but I think there's also a very key aspect to this, which is that, as Jessica said, 70-year-old ladies in China are already using, WeChat Pay, Alipay, whatever. China is already digital. There is absolutely no psychological barrier to this at all. So in a way, the ground has already been set. The next thing is that one of China's big monetary policy objectives is to rely more on the renminbi, to replace reliance on the US dollar. And if you shift types of currency, if you shift currency technologies, that could assist you in that very important aim. So I think that's one of the drivers. And I also think sort of security is important. I think the Chinese authorities see this as an anti-corruption device. They see it as a way of tracking down who's got what. They can trace currency much more easily than they can with, notes. So I think those things are in play. But when China goes for this, and we've seen the way China goes for everything. I mean, look at 5G at the moment. Yes. The rest of the world is scratching their head about 5G. China's already installed almost 100,000 5G base stations. That's since June, right? It's quite extraordinary. When China goes for this, it really will go for it. And having spent 5 years planning, they have considered all the different permutations. Yeah. In my book, they're going to go for this. The rest of the world will watch, and I think we'll come up with different policy responses.
Yeah, Charles, your take. I mean, stablecoin and the significance of the China move, and how other markets, how the governments will respond.
Sure. I'd like to complement the remarks before. I think also the stable coins and this China central bank digital currency in the making, it's a way for the central banks to re-legitimate themselves. If you look at how the economy is structured and how money is distributed within societies, you've got a lot of different intermediaries. So the central banks give money to banks give money to credit card processors or Alipay and all this payment, and eventually they don't get so much information. They get reports every quarter of how is the economy doing, where is the money being used, and these digital currencies, which are blockchain-based, will give, again, a central role to central banks, giving them really live data feeds about how is the country, how is the economy is using money, where is the money landed, is there any risk? So it gives really a new role, kind of refreshing the roles of central banks. When it comes to stable coins, it's for the moment, it's the early days, so everyone look at the technology and thinking, oh my God, I need to understand blockchain. My view is blockchain will disappear in conversations in 1 year time.
It won't disappear, it will disappear from conversation.
It's going to be just normal pipes. No one is probably able to explain me how Alipay works. Alipay is digital money. So today we are thinking, okay, these ledgers and all these complicated terms, but it's going to be basically totally integrated into the economy, and it's going to come in your phone as a stable coin, as the same way your money is coming from your octopus or your credit card. The big risk I see in stable coins is to kind of reproduce these kind of cartel currencies. So depending on what kind of directions in terms of technology choices and how you build the infrastructure for these currencies, you might see in some part of the world people rebuilding kind of closed wall systems. Like you enter my system and there is like 7 or 20 or 100 banks, and you're going to be able to basically transact within this private club. And if you really want to have a successful stablecoin launch, you want to have an infrastructure and a design from the very early days which gives you the reach. And what these stablecoins are is they are basically internet money. And internet has been successful as soon as it was leaving the world of intranets. So maybe you remember, at least I remember, my company at the time was very excited about intranet.
Yes.
And nowadays, no one has an intranet anymore because it means nothing. You don't want to have a little club with 5 or 6 people. You want to get the reach. You want to have private conversations, but you want to use a global network. And I guess we're going to see in the early days of these stable coins some kind of private coins But very quickly they will understand that if my US dollar or my renminbi cannot be sent quickly to a small business in South America or to anyone cross-border, they're going to lose value, or they're going to be basically taken over by some other stable coins which will have a global reach.
Yeah.
So the technology choice and the way you're going to design these new blockchain-based currencies are very important to really enable the programmable money and the reach of the third generation of internet.
Jessica, I mean, the whole digital currency area is much debate, but clearly has accelerated in the last 6 months. And then the stablecoin round, Libra. As a virtual bank, new to like a big disruptor, where does that fit in, and how does that have an impact on the way you do business?
I think this is all part of the bigger FinTech ecosystem, right? And how technology is advancing and people are being more and more innovative and creative and challenging the status quo or the norm, right? So I think this is all positive and heading the same direction. As for the virtual banks, I mean, it's a new regime in Hong Kong, so you got to take things a step at a time. So I think even as you think about the scale of all the 8 licensees of the virtual banks out there in Hong Kong and in other jurisdictions, they don't throw out their whole product suite in day one, right? It takes time for them to build out. So I don't think it'll be any different for how it's going to be for the virtual banks, digital banks, or neobanks, right? I think people start adding products onto their platform as they feel that it's something that makes sense for their customer base. Because at the end of the day, it's not a one-size-fits-all, right? This may be very good for individuals. It may be very good for SMEs doing trade. It may be good for everyone. We don't know yet, right? But I think it will all come down to what do your customers want, and is this appropriate for your proposition and what you're running as a business, right? So I think the government's intention has always been the intention, at least HKMA, it's financial inclusion, it's individuals, and it's SMEs, right? So if you start off, is stablecoin the solution for SMEs? Is it solution for individuals, for example? So I think it remains to be seen, but definitely all positive in terms of heading towards the direction of improving or providing more options for the ecosystem.
Lukas, the decision by China, the passing the cryptography regs, and the likelihood, it seems, of digital currency out of China, in terms of Hong Kong, that could have a major impact.
So I can share a perspective which we learned when we began trying to connect the Hong Kong and mainland Shanghai, Shenzhen markets about 5 years ago. There is a fundamental difference in the philosophy of how the Chinese capital markets and payment systems are designed, right? So for example, in the West, we're used to having your individual sort of information held behind several layers of custodians, and Charles was talking about intermediaries. To some extent, that also exists in China, but they do have right from the 90s, when those infrastructures were established, they had what we call a see-through market structure, which means that the Chinese clearinghouse has 157 million accounts. I mean, digest that fact for a moment. You won't find any other infrastructure like this in the world that has even 1% of that, right? So in China, you as an individual have your own account in a clearinghouse that in the West would be reserved for big institutional players. You cannot trade in China unless you register for such account with your national ID. You cannot really buy a share in China unless you pre-fund that purchase. You cannot sell a share in China unless you pre-deliver that share, right? And especially if you're in a different time zone, that becomes, so it's really sort of much more T+0, T+1 kind of market. It's very, very different by design, right? So when we try to connect these two markets, we've already seen what we call a blockchain philosophy without blockchain technology for years in China, right? And when we ask ourselves, what is blockchain going to give them that they don't already have? Because they can already see everything. Yeah. At least on the sort of security side, they can already know exactly who's got what. There's an audit trail, there's tracking, right? I think perhaps, as Charles mentioned, they're trying to sort of reassert that kind of level of transparency on the payment side as well, where there's been a lot of development through these tech platforms. But for us, it's actually nothing surprising. Hong Kong has been preparing for that kind of market structure and that philosophy for many, many years. And even today, when you trade cross-border between Hong Kong and China in the equity market, we're already using this sort of client identity structure, which is very unfamiliar in places like New York or London.
Okay. I do want to open this up for questions, so please let us know if you'd like to ask one, hand in the air, and just name and organization. But just before I turn to you, James, the super apps, which aren't necessarily in the fintech space, what impact are they? I mean, do you see them in the fintech space?
Right. Yes, absolutely. I think this is a really key story because I guess to me anyway, very simply put, the whole fintech universe consists of the traditional financial institutions, whether they be banks, insurance companies, whatever. Then there are digital payment companies in between, and we've already mentioned several of them: Alipay, WeChat Pay, Paytm, PayPal, etc. And then there's the group of disruptors. And the disruptors can literally come from anywhere. And this is what makes this environment so perilous for the incumbents, I believe. And two big disruptors that are moving into payments are Grab and Gojek. And if you want to look at one of the most interesting battles in this region at the moment, go to Indonesia and go to a banana fritter stall in West Jakarta and talk to the lady there who runs the stall. And by the way, she makes the best banana fritters in West Jakarta. They're not quite burnt, but they're a little bit kind of glazed.
This isn't a virtual one or a metaphoric one.
This is
a
not
real
virtual.
One.
This is not virtual. I know it's a little bit, it's nearly lunchtime, I'm sorry for that. But yeah, just glazed with the sugar. Anyway, what happened to her was that, first of all, Gojek, which, as you know, was a ride-hailing company, now does food delivery, came up to her and they said, "We understand your banana fritters are the best. We would like to have an arrangement with you. We come here, we buy loads of your fritters, we distribute them all over the place. The Jakarta traffic is terrible. Our guys on motorbikes are much quicker, blah, blah, blah." Her stall then became 10 stalls going all the way down the street. And soon enough, and this is the point of the story, the guys from Grab came along, a Singaporean-based ride-hailing company that also does food delivery, and said, "By the way, what commission is Gojek offering you?" She said 15%. They said, "We'll give you half," right? Why did Grab do that? Because the game in Indonesia and the rest of Southeast Asia is not banana fritters. It's not even food delivery. It's data for fintech use. That's what they want. And both Grab and Gojek now have many, many business areas, services. Gojek has 18, including massages, clothes washing, tailoring, all kinds of things. And Grab has 24 business services, but they both have digital payments. This is the key to these companies. It's collecting data through providing consumer services, using them in digital payments. That's the key. Because the whole business about disrupting the traditional banks and insurance companies, et cetera, is about getting personal data. That's it.
It's about data, absolutely. Okay, let's open it up now to questions, please. Hand in the air for the first question. Please, if we could get you a mic.
Hi, my name is Salim, and I work for a crypto exchange called HKEX. I have sort of an open question to all panelists. So we see an arms race between the United States and China in terms of blockchain and the rise of digital currencies. How do you think Hong Kong can benefit from this situation as a platform hosting tech talent and businesses? Do you see any structural challenges and changes coming up at this front? And if not, what should it be doing in order to meet this new phase in terms of technological changes?
Okay. Jessica?
Less so on the crypto, I'll tell you more on the hiring side or talent. Everyone talks about that, right? I think what we're seeing right now in the age of digitalization is I was reading an article, I can't remember if it was one of the financial newspapers out there, but basically they're saying people should be reskilled to do something different, right? Because they've been working in, for example, a retail bank for a long time, now they need to go to a virtual bank. I see that as partially being true. You know, there are certain, new technical skills. Like I didn't know what SQL and a lot of things like Agile and, all these buzzwords until I joined a FinTech company as well. Yes, there are certain technical things that you do need to learn, but at the end of the day, I think a lot of it comes down to mindset and willingness. If putting time to study and learning a new topic is actually not that difficult if you're willing to put the time and effort into it. So I think Hong Kong will naturally have a problem difficulty because the population is limited. But having said that, it's really about introducing the opportunities and reaching far and wide. It could be international, it could be Hong Kong. But I think it's about, are you being creative in terms of your recruiting efforts? You can't expect people just to come to you, and maybe the ways of we traditionally recruiting via websites or newspapers or whatever, those are outdated, right? So maybe it's not just the end service, but it's the means of how you get to your product at the end of the day. So I can see the challenges associated with that, but I also see that we need to make an effort in terms of doing the right thing to do the recruiting part of it when you think about talent. And we as individuals who are looking for our next role, we also need to take a proactive effort to reskill ourselves or repackage ourselves or know where you bring value. I know nothing about tech. Well, I did 2 years ago, I knew nothing about tech. But there's different other attributes that you can bring and contribute. So it's a matter of how can you bring that to the table?
Yeah. Okay, Lukas.
I think generally a lot of people around the world, and this is not unique to Hong Kong, a lot of regulators have burnt a lot of midnight oil sort of trying to challenge themselves. Is this crypto asset a security? How should we regulate it? Are we exposing sort of retail investors to the risks and so forth? And I think that debate is still ongoing and unresolved, and there's a lot of struggles for people trying to get these products and these exchanges out into the market. I think generally, other than the occasional sort of sandbox which is made of quicksand and they just want you to sink in it and never be seen
quick
again.
sandbox, yeah.
But generally, these things are, I think, moving in the right direction. I think 3 or 4 years ago, it would have been challenging for you guys to even sort of get a meeting with the SFC or know the right person. Whereas today, I suspect that dialogue is a lot more open. Charles, I think in your last role, you saw a lot of people coming to Hong Kong, knocking on the doors of the regulators, asking, hey, how are you going to regulate crypto? I think Hong Kong is doing okay at the moment, can still do a little better. But ultimately, is it going to end up being a big sort of digital asset wealth management center or a hub? I think it's probably too early to tell, because some of these latest restrictions that have come out saying, well, if you're running a sort of traditional investment fund and 5% or 10% of it is in crypto, then you have to go off and get these other kind of licensing requirements and so forth. Whether that's good or bad, or whether that induces a competitive race with Singapore, I think we will see. Yeah.
Charles.
I think there is two things Hong Kong can accelerate things on when it comes to blockchain and digital assets. I think the crypto side is really a speculative side of the blockchain industry. It's a very tiny market, and it's not where the big growth will come. This is my belief. Using blockchain as an infrastructure is much more a strong proposition. At the end of the day, FinTech is finance, and finance is a game of trust. And Hong Kong is a trusted place for hundreds of years. Trusted place for payment, for capital markets, Hong Kong is trusted for its law, Hong Kong is trusted for its regulation as well, and for all the industry we all represent here. And this is going to be very strong. And even though blockchain is a kind of trustless and enabling technology, at the end of the day, when you talk to people, they look for a trustable place, they look for a trustable counterpart. So that's the first thing. The second thing Hong Kong should be keep working and focusing on is accelerating regulations and being involved in all the standards conversations. If you look at Hong Kong in the next 5 years and the next 15 years, the big things on the agenda of the Hong Kong and Beijing governments are the Greater Bay Area. So there will be 3 different jurisdictions between Hong Kong, the mainland, and Macau. How do you basically enable and facilitate transactions between different currencies, identity system, legal system? In a way, the Greater Bay Area is a mini Belt and Road. And if you look at what is a Belt and Road is basically the biggest deployment of digital infrastructure in the history of humanity. You've got 100+ countries with a very limited kind of financial infrastructure in place, and within the next 20 years, they're going to be moving to the digital economy. And you want to make sure Hong Kong is part of the standard conversations, the regulation conversations. And I strongly believe Hong Kong will remain within your contracts, within your part of your transactions using blockchain or FinTech, will remain the trustable body and the trustable party in the transactions.
Yeah, James.
I think these guys have said it.
Summed it up. Great. Final question, please. Just over here.
I'm Wilson Tong from Hong Kong Polytechnic University. Specific questions, Hong Kong love to compare with Singapore. So in terms of fintech and digital transformation, Singapore seems to be much more aggressive, and it seems move faster than Hong Kong. So I want to know how lag behind we are in Hong Kong compared with Singapore, and what would be the advice to Hong Kong government that in this way that we can catch up?
Let's start with you, James, comparing Singapore and Hong Kong.
Okay, can I slightly change the frame of the question? I would like to compare Hong Kong with the mainland. And there's one particular example I'd like to give, and that is the Ping An Financial Group. Because to be frank, I mean, let's be honest, I spent 20 years in the mainland. I've only been in Hong Kong for 8 months. I don't know Hong Kong that well, so please criticize me after. But when I look at what the financial institutions in Hong Kong have done in fintech, I'm very underwhelmed. When you compare that with Ping An Group, you really see what could have been done had the leaders of the big financial conglomerates in Hong Kong had the vision. Okay, so Ping An currently has 500 million digital users in all of their business, right? So they have InsurTech, they have a bank, they have asset management, they have auto services, they have healthcare, real estate, smart city, they even have an entertainment company. All of these are digital. All of these companies are taking data from the people that they service. This gives this company an incredible traction. They know what you're doing throughout much of your life already. That allows them to predict the future. It allows them to cut costs in the services they provide. It allows them a huge window on the world. If you look at what Hong Kong big financial institutions have done, I'm afraid it's far, far behind. I'm not criticizing Hong Kong per se, because Ping An is probably the leading fintech company in the world, right? So it's far out there. I mean, if you compare it to the UK, it's far out there. Compare it to the rest of Europe, which, as we heard in the earlier panel, is hidebound by this very, very restrictive regulatory environment that we have. Ping An is far ahead. So the place to look is mainland China. Singapore, yes, I would say, is doing some stuff, but the place to derive a model, I think, is across the border.
Okay, we can still compare Hong Kong and Singapore, though.
That's a question I got. That's a question I got a lot.
Can't answer the question.
That's a question I got a lot in my previous job. I think this is very much a Western question, Western media, and it's always the same. So basically, you compare the tiger mums from Hong Kong, the tiger mums from Singapore. You compare the fintech from Hong Kong, the fintech from Singapore. At the end of the day, it's 4 hours away. So when you are in Singapore, you will probably not make much progress on your China agenda as a company. When you are in Hong Kong, it's going to be a bit challenging to progress on your Indonesian growth. When you look at the ecosystems themselves and you look purely at data, because I think it's a sentiment the press and the people like to talk about. When you go to Singapore, people will tell you, when you visit Singapore as a fintech practitioner, people tell you, wow, Hong Kong is fantastic. You've got 160 banks, you've got 250 IPOs every year, there is 8 new virtual banks coming up, so the grass is always greener elsewhere, right? But if you look at the numbers, the Singapore fintech ecosystem is a much younger ecosystem. Usually the companies are between 1 to 3 years. And this is the time of the life cycle of companies when they are very fragile, and many of them will not go through. Basically, 70% of them will die after 3 years. And this ecosystem is very much kind of sponsored by the Singapore government. So if you open a company in Singapore, you've got free office, free computers. Maybe you have to pay your coffee, but that's about it. In Hong Kong, it's much more an organic ecosystem. Companies come in Hong Kong for growth and not necessarily for starting only. The last survey we did when I was still with the government, we were estimating about 550 fintech companies here in Hong Kong. I'm sure next week during the Hong Kong FinTech Week there will be updates and we're going to be able to measure. I think whenever these questions come to your mind, try to come back to purely the data points. How lively is the stock exchange, how ambitious are the virtual banks, how much transactions are done in a digital way in Hong Kong. Many people think Hong Kong is only cash. We have 40 million Octopus cards in Hong Kong. Octopus is digital money, and it's 20 years old. So before the credit cards, Hong Kong got Octopus. So it's a kind of legacy. It's something which we all love. Everyone has an Octopus card in our pocket. And so we have to be kind of good with ourselves. And maybe one last thing is, one thing Hong Kong can do is basically tripling the numbers in marketing. The way this sentiment is built is basically by media, by marketing, by communication to the outside world. When someone in Europe or the US asks itself some questions about Hong Kong and Singapore, they are not here. So what do? They read newspapers, they go to events, and depending on how much efforts and how much budget you put on this kind of communication, you're going to be able to reshape the sentiment. But the data are very good for Hong Kong, honestly.
I would just, I completely agree with Charles on that one, and it comes down to data is the most important thing. You know, don't believe in hearsay. If you were to engage or to start a business, you would do the proper research and look into the data that gives you the facts in terms of what's going on, right? But obviously, if we're just having a casual conversation, you can rely on the splashy headlines behind for that. I think to Charles's point is, get yourself down to FinTech Week next week in Hong Kong. You know, Invest Hong Kong's doing a great job there. And then the next week, get yourself to Singapore FinTech Festival in Singapore and then do a comparison, right? Because at the end of the day, I think they appeal to different market segments. And I think geographically, that is the most important thing, right? Is, are you focused on Southeast Asia? Are you focused on the mainland Chinese market or the greater sort of China market? You know, we're very bullish on the GBA, so it makes a lot more sense to be focused here rather than to set up shop in Singapore. So it comes back to what is your objective and what do you want to achieve from where you set up the company, right? Where you're headquartered is only part of the story. Ultimately is where your customers, who are you servicing? If you want to service, you know, companies in the US, then maybe it's less of a difference whether you're based in Hong Kong or in Singapore. But I think that's the essence behind it. But go look into the data and go check out next 2 weeks. There's a lot of activity and hopefully some inspiration for everyone.
Okay, but Greater Bay Area, obviously, in the geographic reach is important. Final word to you, Lukas. I guess the deep capital market.
Yeah, I'll be quick. I think both Singapore and Hong Kong are well behind Shenzhen. I agree with James on that. And I mean, I think if you look at the big sort of 5 tech companies in China, Baidu, Ali, Tencent, Huawei, Ping An, all 5 of these companies are still led by their founders. So they have a commercial agility and flexibility in terms of strategy that is really difficult for others to match. And having worked on projects with all 5 of them, I can tell you the experience is unlike anything you'd get with a Western technology company. And not because their engineers are producing some kind of magic that other engineers cannot create, but because their ability to make decisions and move quickly right at the top is really amazing.
Right, we have to leave it there. Oh, okay.
Michael, just one last thing. If there is one thing you want to read on the HKEX website, there is a lot of very boring documents about regulations and everything, but there is a quarterly newsletter about the data and statistics about transactions in Hong Kong. Like what are the banks doing, what kind of payment are going through Octopus, how much is the growth of payments using SVF license, such as Alipay and all these guys. And you see very strong growth and you will be mind blown by the numbers. We're talking double-digit billion Hong Kong dollars moving every month on this new kind of pipes in the Hong Kong economy. So it's pure data and it shows really a great momentum.
Okay, thank you very much. Look, we have to leave it there. I'm afraid we've run over time. Please join me in thanking my guests, Jessica Lam, Charles Dorsey, Lukas Petrikas, and James Kynge. Thank you all very much.